Okay, hello everyone, and welcome to another live Pepperstone video here on YouTube. Today, we're discussing everything to do with the hottest markets right now, including the S&P 500, stocks in general, commodities, and a little bit of crypto discussion. As always, I'm joined by Tyra and Abella. How are you going this week, Ty? It's been
Good,
volatile
thank
as well.
you, Tom. Yes, welcome everybody. Look, another week sees some new fresh highs on some of the indices, hanging in there for dear life. Are we going to have some Easter joy, Tom, or is it going to be the doom and gloom of the Easter bunny not bringing us eggs towards the end of this very, very important week? I know my thoughts on the market. Normally we see a little bit of green, a little bit of happiness before the Easter holidays, and then generally people come back from work quite sad after a 4-day break, and the market really cops it. So, is that what's going to happen this year, Tom, or are we going to see something different?
Well, we'll let the charts decide, Ty. That and more coming up in today's show. We'll see you in just a moment. All right. Well, I guess the best place for us to start then is the stock market itself, Ty. And we'll talk about the US 500 to begin with, but we do want to also be discussing the Russell 2000 this week, as it's kind of shown us a little bit of different action in maybe the last couple of trading sessions. Let's bring up the US 500 to begin with, though, and it's still in an upward trend. For anyone that's a swing-based trader, you're still going to be looking at that long leg kind of play, as in it is still melting up, and that's where we have a series of higher highs. But they do have a saying, Ty, that is don't short a dull market. That is a market that's making slightly higher highs. This is one of the most dangerous markets to have a go at. Recently, it's just been making 2 steps forward, 1 step back. And as always, some of the big indicators that you want to have on charts, things like the 20 moving average. Another one that I thought I would bring in is the advanced decline line. So maybe we'll add that to the charts right now using the Pepperstone platform and TradingView. And you can see here that stocks have basically been increasing along with the trend. So this basically means there's more advances than declines, and it's overall a very bullish stat for the market. So if you're ever looking at a nice trend, especially in the markets, and you want to make sure it's correct, then maybe adding that ADL onto your charts could be a good thing to do. That's a little tip that we'll add in there. One of the other things that you're always looking for, Ty, has to do with divergences. So if we type in MT4 MACD, which is something that we often do talk about on this channel, and then you go down to something like a 2-hour, you might be able to see some divergences. But I would argue that in this case, it's not really that it's super divergent. I think that markets have shown that they're really quite strong, as you can see here by the higher hump than the previous humps. But whether it's a weekly, a daily, or a 2-hour, it's just continuing to grind up through those areas. Now, I've got some key levels, but Ty, do you have anything in particular that you're watching in terms of a zone before we get into those?
Yeah, look, I don't like I don't like going against the market trend. There's no question about that. But I think there is a time and a place to really implement that rule, and I like to implement that rule when there's something in front of us to aim for. Okay, so when we're at an all-time high, and the market to me looks like it's starting to grind up more than it is to really advance up in a big hurry. I think you just have to be absolutely cautious in my mind. It doesn't mean that the market's going to sell off dramatically. It doesn't mean that the market's going to go into Armageddon. It just means that there's a correction only around the corner nearly in every market. Like, we know that, right? Every trend, there's generally correction waiting. We've had an extraordinary run here. Like, this has been going up for, it's coming on 6 months now, I think. Probably 6 months without a decent pullback. So and why? The question you have to ask yourself is really, is the economy that good? We don't really know. I mean, it's improving. So I think that you have to really approach the market with not so much skepticism, but with care, I think, Tom, where that it looks like it's starting to potentially roll over a little bit. People are talking about getting in. People are talking about 5.5 and 6,000 on the S&P 500. When I start to hear that sort of talk, I definitely get a little bit nervous for the people going long, that's for sure. But to me, the ideal trend is a trend that has an end point, and that end point for me, or not so much an end point, I mean, to take profit points, what I'm talking about, where you've got a previous resistance zone or a previous point that's been touched. There are a lot of those trends still happening. So you don't have to trade the S&P 500 is what I'm trying to say. You don't actually have to trade this one. There are plenty, even the Russell. Like you say, I mean, the Russell 2000 is a really important chart. It's doing some important things, but it's not at all-time highs. So if there is more legs in this trend, or more legs, I guess what we can say is the US economy, because that's what we're effectively talking about here, then aren't those legs better spent in a market that has highs previously higher than where we currently are? I know we will touch the 2000 in a minute, but that to me is my preferred market, because the S&P 500 can't really go up and make new highs without the Russell really following in tow. If the Russell turns around and goes the other way, the S&P is likely to follow and not too far behind it. So to me, there's more upside room, and it makes more sense if the market is going to continue higher by trading the Russell. That's my thoughts on it.
Well, we will be looking at the Russell very, very soon. I'll go through a couple of levels that I've got watched here for the US 500. Firstly, it comes back to understanding some data points as well that come into analysis. So 5250, 5300, these are both 50-point increments, but there's a lot more than that. If we do manage to take the 5300 level again, because of the nature of this current 3 to 4 day sell-off that we've seen the bears semi-win on these sessions, then when we do rally through, if that does happen, I would expect the 5250 to become 5300, at least from a technical perspective. There's a lot of people trying to drive it to this price, plus what we have a positive gamma situation. On the underside of this, if we keep seeing sell-offs, we can see that the 20 moving average on the daily is starting to poke up closer to that 5170 and 5180 area. So if we drop the smaller time frames, this is where we have our last level of major resistance, which is also supply, which is now demand or support. So basically two different technical analysis theories over the top of each other. I'd also like to just give a big shout out to people that are joining us here. We've got Peter, Royston, Dave, Warwick. Great to have you here, and Monica as well. Thanks so much for joining us. Remember, guys, give it a thumbs up if you enjoy this type of content on the Pepperstone Live platforms to make sure that they know that you like it and we keep bringing it to you. So 5175, 5180 for me is a major little level for day traders this week. If we do see sell-off or some type of dip into this level, I think that's where buyers could recommence. But for the bears to really take control of this market, they're going to need to push it quite a lot lower. I think under 50 and 50-50. And that's where you're going to get that swing trader coming in that's actually saying, okay, this market is turning to the negative side. Let's have a look at the US 2K though, Ty, because you mentioned it before, the Russell 2000. Now, there are some parts of the Russell that have broken it out. This, funnily enough, happens to be my trade of the week. So I guess what I'll do is I'll take through some of the kind of key levels that I'm looking at on the Russell, and then Ty can give his thoughts as well. But the first thing that for me in terms of the trade of the week, it hasn't happened yet, but if the market does manage to break above our key weekly level, now this is going to be a 2110 on the Russell, and 2110 is never, well, not never seen before, but certainly not seen before in the recent rallies, a level that we would be closing above. Now, if the market is able to get through that, you'll notice on this left-hand side, Ty calls it, what do you call it? Green, blue sky above. Yeah, Ty, is that right?
Blue sky above, Tom. Blue sky above.
If you want to go with the muddy side, depending on the country you're in. So basically, we're looking at a fairly easy path for something to go to about 2250, where we face other further resistance and supply metrics. So from a path of least resistance, I think if we get through 2110, this is probably going to be my trade of the week from that action. Now, has it happened yet? No. Will we need a weekly close? Absolutely. Will it still take quite a few weeks to get up there? I'm sure it would. But if this market's going to continue its breadth, continue its improvement, as Tyrone mentioned, it's the mid caps and small caps that really have to get this thing going. And in recent weeks, we've seen that energy stocks, materials, metals, all of the things that have been kind of, I would say almost suppressed, they've started to move. And that's been probably about a month now that it's been going on for. So Wall Street's even showing that they're now moving some of their money flows into those areas. On the smaller time frame, I've also got one other level that I'm looking at from a potential buyer to be interested in, and that's going to be that 2050, 2040 zone. So it's down here, and it's the 61.8 fib from the low, the previous low to the high, and then it's also a previous little bit of resistance. So this 2050, 2040 zone, I could see buyers liking this area, Ty. If they don't hold this, I think it could get really bad really quickly. So for me, if the market comes down here, I'd be looking for structural creation. And if the market gets through 2110, oh, excuse me, I'd be feeling a lot better about it. I don't know what it is. It must be autumn hay fever or something that's happening here down in
May well be. Yep. And I think that, like either of those trades and either of those scenarios present good opportunities for us as traders to swing. I'm really comfortable going both ways there in that situation because they're both very, very solid zones. But I do like, you're right. The mid caps are going to be what drives this market higher. They have to, because Apple's not there anymore. So realistically, Tesla's trying to poke its little head out of the woods, but the truth of the matter is, it's the mid caps that are going to have to get it higher. Yeah. So so realistically, if you're going to go higher, I would feel a lot more comfortable trending in a way where we've already seen previous highs. Not that long ago either on the Russell 2000, by the way. Like they're a little bit away, but not 10 years away. Like they were there late 2021. The thing's gone up to 2,400. So it's not like it hasn't been here before. So that to me is the better trade than the S&P 500 because there are clear set targets, and the blue sky is very, very prevalent. So in order for the S&P 500, let's call it, to go to say 5,400, that Russell's going to have to break out of this zone and it has to go up. And there's a lot more, I think, room for profit because there's a far bigger range for you to take profit prior to resistance than going into uncharted territory. And I think that's my point.
Yeah, I think the Russell 2K presents two really excellent opportunities. If it does start to weaken and break through again through this downward trend line, that's probably telling you that something's not quite right and we might be getting that correction that everyone's wanted. So it's a good pair. It's certainly one we're watching. Let's move over now to the US dollar, not US oil. We'll go to US dollar first because this is doing something a little strange. And I want to talk about the dynamics of the dollar right now, Ty. Effectively, it was once perceived, and by most people, including myself, that it would probably be the US cutting rates first. In many ways, the US was the most aggressive country pushing rates. They were the leader of getting the rates up to where they are right now. But the economies remain quite robust, at least in the metrics that we're seeing. Now, what's happened is the Swiss central bank last week, or was it, I think it was last week, they cut rates surprisingly before the US. And we're seeing some weakness in the European Union areas. Obviously, the UK is not quite ready either. But rate cuts are going on around other central banks. And it's now considered that 100% of the major central banks are all looking to do cuts. Now, if they're cutting before the US is cutting, then when you consider all of the currencies in the world, the US is becoming slightly more desirable because really what's happening is most of the other currencies are earning less per dollar invested in those particular currencies than the US comparatively. So that's partly the reason it's moved up, but it faces, I think, the biggest test yet, a huge resistance here at 104.20, multiple closure highs. It did a monster reversal last week. Ty, you've been a bit of a bull on the dollar, I think, in some of these areas here, and I think you've got to trade for the dollar later on. But this area here, if it manages to close above this, which we're probably only really going to know maybe next week, which is going to be the core PCE data coming out this Friday. If it does, there's, again, a lot of sky above. The momentum play may actually be strong dollar. What are your thoughts on dollar here?
Yeah, look, it's at that zone, the 104.20 is extraordinarily important. But I think from just touching on your European story, I mean, if we can just go to the euro for one moment, I mean, it's really the inverse of what we're talking about here. I think, if you look at it on a chart, what I see here is a very, very clear series of lower highs and lower lows. And we've got to test up. Yeah, that second last candle there is dead set a red shooting star at the 20 and 50 moving average. It attempted to go up. We haven't got the 50 moving average on this chart, but that 20 there, rest assured, it's a 20. And the 50 is right there with it, making it, basically forcing its way down. So that to me, the make or break level for me is the 108. I think that if we break down and get a daily close below the 108, I think there's 100 pips there of let's call it green grass because it's certainly not blue sky. If we break that level there, there's a very easy path down to 107, I think. And I think that momentum can carry there fairly quickly. That, of course, is going to see a dollar index well above 104, probably 50, maybe even probably fast approaching 105. And I think that probably tells the story of where we could potentially be with the dollar index. I agree. And I think the markets are setting up in a way prior to Easter Yeah, it's a thing. Like, is it technical? No, but is it a thing where the market, does find a little bit of steam prior to the holidays because everyone's feeling good, and then it comes back a little bit sad? It is a thing. So, and that thing may well be, triggered by the news on Thursday and Friday, leading into a non-farm payroll week. Remember, it'll be non-farm payroll week next week. It seems to come around so fast, Tom. It seems like it comes around every fortnight, but it's not. Rest assured, it's not every fortnight, but it is non-farm payroll next week because it is the first Friday of April. And you wouldn't want to be like if the market is a little bit low on sentiment at the start of the week, you might. And Monday will be a close anyway. Is the US closed on Monday, Tom? I know it closed on Friday, but is Monday? I know in Australia, Monday is a dead set holiday. Like, there's no question about that.
Yeah.
Around the world, it's a little bit different.
I know it's a bank holiday. Let me it's 1 second here. I think it's open. I'm pretty sure. Yeah.
It might be open for half a day. I know it does something a little bit strange.
The bonds.
Yeah. Our friends in the US don't celebrate Easter. Yeah, the friends in the US don't celebrate Easter quite like we do.
Good Friday's closed, for sure.
We love our chocolate. Friday's definitely closed. So we have to be mindful, that there is going to be a 24 or a 48-hour period. I get the feeling it might be a half day. But there is going to be a little bit of softness in the market. So, volume will be down, no question. And sometimes if the sentiment is a little bit low and the volume is low, Tom, we do see some rather dramatic moves that are based on very little volume. So you just have to be a little bit careful over this period. That's all, especially leading into a non-farm next week.
The problem is the core PCE. So that's one of the leading Fed indicators they use for this whole inflation story. And because we're seeing reinflation, this core PCE, and then just randomly Jerome Powell coming out about an hour and a half after that data and talking, that's coming in a liquid market. So it's not just that we've got concerns over reinflation. We've got concerns over when are we going to actually get these cuts. And that brings us to also discussing the US 2-year here quickly, Ty. Just remember, everybody, 4.77 is going to be a really big factor to watch the US 2-year. Now, if you've got the TradingView platform and Pepperstone connected, you can type in US 02Y and US 10Y, and these are both very much worth watching and tracking over time. And effectively at this point, we're looking for this to break out and to continue on. But where we're at is a key resistance. 4.77 will be a big level. We're in the middle of nowhere at this stage. 4.4 will probably give the gas to the market to continue up. So yeah, a key level there for yields. But yeah, core PCE this Friday. So just don't forget about that. Illiquid market, many closed areas. It's going to be a bit of it could be a little bit wild.
Yeah, I think our motto, the patients react and don't predict, Tom, is probably even more prevalent in markets where there is a little bit of potential risk. And I see potential risk in this market, not because it could really sell off, because I think that the potential risk is that it gets volatile. It could take out trades either side if you're not a little bit careful, because it could spike up or it could spike down on low volume. So you want to be a little bit cautious in those times. Hey, guess what? It's the holiday season. Sometimes you're better off just sort of kicking back, eating an Easter egg, and just watching the market play out and come back straight after the holidays, and then look at what the market's done without your involvement. Sometimes it's better to watch, be patient rather than try and predict what it can do. Because honestly, I really believe that it could go both ways very, very easily without any, real form of information. I think that they can make it for the data what they want, and they'll push it up or they'll push it down. And when there's low volume, I think it's a very, very high place to place a lot of care and caution on your trades. It's a really good time to be patient.
Here's a chart that we've all been watching as well. We were pretty much on the dollar when it comes to oil over the last couple of sessions. I encourage everyone to go watch some of those other ones. We've been talking about strong oil into the 82.50 to 84.50 range.
It was fantastic, wasn't it? It was absolutely fantastic.
It was pretty nice. It was certainly a great coil, certainly a very good move. Now, since we've moved up to that level, we've seen a weekly closure of a shooting star. Now, remember, it's very important for us to always go to weeklies and monthlies and dailies, even if you're not trading those timeframes, because these are the timeframes that show you a little bit about what the biggest players in the world, the algorithms and everything else are really trading and the positional flow. Now, that's a shooting star, not a great candle. You can see right now, it doesn't look like a great candle either. if we go down to smaller timeframes, it is very important that oil actually holds here, because what it did was it rallied back up and then it's pulled back down. Now, I've been a little bit bullish on the potential day trade here to try to get this thing up. I'm aware, very aware, that we've got that weekly shooting star. But if it's able to actually find buyers here and then rally back above this point and close a weekly through, I would say there's a good chance, Ty, that we're going towards that next major resistance. And from a technical level, we're talking 88 a barrel. Now, I always like to look at both. So you should look at both crude and Brent. So make sure you do analysis on both. But this is a very critical point here for US oil. It really needs to hold up. If it takes down this level, it's going back down. And next stop, as you can see, I've got marked out here, is about 78.
78 is calling it like one of those big giant magnets that they put down in the ocean, Tom, to bring up the boats that sink. That's what it's going to be like if that level gets broken, I reckon. Because it can fall very, very quickly. And 78's a level. High 77, 78, that's a very, very heavy support level right there. So, and look, what we see on a daily, if we go back to the daily for one moment, we can see that, we've obviously already got the lower high, like really. So what we're looking for here is a potential break. If we get that break below the 20 moving average, which is a close probably below 80.50, you're going to have a lightning bolt. There's no question about that. You've got a series of lower highs and lower lows on a daily, but you've already got the confirmation. And this is why Tom said to go to the weekly, even though you're not going to trade on the weekly, see what the weekly is doing, because damn, that candle looks rude. That's a very rude candle on the weekly.
If this weekly closes like this and it gets underneath here, next week will be most likely shorting.
Yeah, exactly. And that's not a bad thing. I favor the long as well, but it's at that point now where it would want to hold here. Like it needs to hold here. Yeah, it has to. Yep.
Very important. And if it doesn't, 77, 89-ish level could be faster than anyone that you can blink in terms of the market movement. This is calling be adaptable. I might have a slight bias towards the upside because recently I've had so many upside trades. I know that it's at the key critical level. I can see that. We all can see that on the charts. But I'd be willing to also take the downside action if it happens. I think the ability for a trader to react to markets to take either side is very, very important. And you have to have no emotion. I mean, look, does anyone really have... The great thing about trading oil is you probably don't have that really strong attachment with oil like you might with a stock. So a lot of people trade their favorite stocks. They might trade Tesla, but they really believe in, let's say, Tesla, the company, Elon Musk, etc. It's bad because it creates a bias. If you said to me, trade Microsoft, I'd say I can't because Microsoft's my favorite stock in the market. I wouldn't be very good at it. I just think every day is a great opportunity. If it falls 0.3%, I got to buy it. So that's not good. And you do want these. That's why it's great to trade some of these objects and things that you don't really like. I don't really care about barrels. Maybe you do, but most people probably won't. Therefore, we can flick from buy to sell when the charts tell us to do so.
Well,
speaking
Tom, who's out there? Tell me who's out there who says, "Damn, I wish we had higher petrol prices." Said no one ever. So of course we want oil to fall. Who? No one. Oh yeah, well yeah. I mean, a retail person.
They actually don't really say that because then they're going to pay higher electricity probably.
We want cheap oil. I want to fill my car up, and I want to fill it up cheap. Damn it! And no one wants $100 a barrel where we're paying $2 or $3 a liter. So realistically, look, it's not always the case though, right? Like sometimes there is situations where we need the market to do one thing or another, but we wouldn't trade one particular zone. Oil, I think, is at that place where you'd be very, very happy to take both sides very comfortably without any emotion whatsoever.
Yeah, I think technically it looks like it's setting up pretty well. USD yen, then the next one for everyone to talk about. This is just such a popular one. We'll get into your favorite pick straight after this, Ty, and then we'll go through the shiny metal being gold, a little bit of silver discussion, and a few others. But we'll start off here with USD yen. Now, everyone's probably a little confused when you think about the fact that they've just raised rates, yet the yen is getting absolutely destroyed. I think, again, it means that you have to be really not so much interpreting that figure and instead following the price action. So that was a great learning curve for some people last week. I've learned that one nastily over the years. Try not to interpret too much. It's unlikely you probably have the right amount of information. Instead, you should be following the price. Anyway, with the yen, it's hit this high, and this is a massive high. So I think we all know that if this 152 level on the yen is closed above, it could be continuous momentum, very, very strong move. But it's come up and it's actually rejected a little bit from this point. So I think from the yen, I'm personally staying away from this trade because I don't really like the central bank intervention currently in the currency.
Right.
But you can notice here that it's all over the place. Some metrics are saying it's overbought. So if a seller may want to come in here and look at the scalp, I want to just go small time frame tie and see whether we've got like a Wyckoff setup. Just because I'm noticing that we've gone slightly higher high here. Okay, so we have probably a BC, which is here. Then we have a slightly higher high, which is going to clip a lot of people's stop losses here. And then we've just gone to a new higher high, and a lot of people will have this drawn like that, which is an ascending triangle. Now, Ty, you know that ascending triangles in general, okay, they're decent pattern, but actually when they fail hard, that's usually where the trade's at.
Yeah, it is.
Opposite
It is.
is actually quite powerful.
The
What do you
opposite's actually
think
more
about
powerful than the
these
trade itself.
actually being more of a short than a long here?
Yeah, look, I'm very mindful that the bigger picture trade has this level being tested. This is the third time it's tested this level basically since June of 22, right? So, and if you are actually, funny enough, if you put the weekly chart on for the US dollar yen,
Reese is on this, by the way.
What?
Did you say that? No, he's in like he said it, and I actually went into the time frame. He knows exactly what he's looking at. Let's go to your weekly here, though. So back to the weekly. Yep.
Is he stealing my trades, Reese?
No. He's just he understands. I know what he's looking. He's got Wyckoff. He's
right. Okay, got you. Okay, yeah, sure.
He's getting wild on the small time frames.
Yeah, and you can see, look, but you can see it's definitely resistance at this point, right? Like we've got very, very heavy resistance at 151, no question about that. But what we're also seeing is an extraordinary amount of divergence on the MACD, right? Like if you look at the MACD on the weekly, you're talking about class, B bearish divergence that is extraordinarily obvious, right? You can see it. It's a big, big drop all the way down, and that's rare actually that you actually get dips like that. It's been it's been a fantastic trade, but to me, I think it's one of the ones where I would be watching more than anything else. If it does blast through here and comes back and tests it from above, different story. I think we'd look at it with fresh eyes and then say, all right, it's busted the gates up, and now we might find support at 151 or 152 for a bigger move up. And I think if it does move up, if it goes up higher, I actually think it's going to be considerably higher. I don't think it's going to get to 153 and call it a day. I think if it does break through here, I think the move might be a lot bigger than people think. So I would be prepared to be more patient and let it break through first and then test it on the rebound if it does come down. But really, you're right. When banks start to use their intervention to sort of force a move, it makes me a little bit uncomfortable.
It is a tough one. Let's move over to your USD CAD, but I don't mind the opportunity on the smaller timeframes there. I can see that false break high. I suggest go look at a Wyckoff analysis that we've done on Pepperstone before if you're interested, because that probably is what it's starting to look like, at least from the platform. USD CAD tie, take us through this one. What are you seeing that maybe not anyone else is? Or they all are. I haven't seen it yet.
Tom, you're the only one that's not seeing this.
I haven't looked, everyone. I just want to tell. I want Ty to tell us the magic. Let's go through.
The magic of the US dollar CAD is probably more prevalent in the weekly, which we're on right now. And I'm glad you're on that, because what we're seeing is an extraordinarily strong channel on a weekly chart. Okay. And really, it's forcing its way up above those moving averages right now. And that 136 is an extraordinarily heavy resistance zone. What I'm looking for here is a break of that level. And I'm really looking for a 200 pip move from this point to the top of this channel at 138. I really, really like the 138 level, but in order for that to happen, I want to see a weekly close above the 136. If we get that, and it's attempted to do it nearly 8 times in the last probably 3 months. Okay.
Yeah.
So it's really attempted to break this zone, and it is dead set a very, very heavily traded channel. So I'm just popping it up on my chart as well, because
I just want to go through this while you pop it up, Ty. So this actually is a very interesting candle the last week. You can see I've honed in on that. Now, what I'm actually honing in on, guys, is the idea that the market came down and wiped this little low here at 134.60. So that's a big deal, because look at how it closed. It closed all the way up at its high. And that suggests that Tyro may get his wish. We'll have to find out. Core PCE is probably going to be the thing that gets this done. But take a look at that. Closes near its highs, very
Yeah.
aggressive. Yeah, I don't mind that on the long end.
It's
It does
trying
kind of
very hard, and this is why I
USD
want a
strength.
week. This is why I want a weekly close above this level, not so much a daily. I think it's really important to get that weekly close above that 136, and I think from that point onwards, I would be looking at targeting the 138, 138.50 as the next parking spot, because there is heavy resistance from the channel that's formed on the weekly chart, but also obviously previous resistance, and it's a number that the CAD can gravitate to relatively quickly. There's not a lot of noise. Let's call it the blue sky. A lot of blue sky in between
nothing much here.
where we're breaking all the way to 138. I like it. So that's what I'm looking for. Not just yet, but I get the feeling that the momentum is starting to pick up, and a strong dollar is not going to hurt this one's chances either. So
if that USD breaks through to the upside on that other one, I think it's going to be euro down through that break support.
Well, you're going to see a euro 107, and you're going to see
a lot of momentum trades.
Yep.
And imagine if it front loads the NFP as well. Yeah. It also could be if the dollar really goes ballistic as well. That's also a negative sign in some correlations with the stock market, although that's been lesser of a correlation in probably late 2023, 24. Let's take a look at gold now. I've been a super bull on gold. Yes, I'm ranting on about gold mega long term here. I actually think it looks pretty good in the next couple of years. But from a technical level, what are we seeing? Well, it's holding up. And this was almost my trade of the week as well, Ty, because I like gold. And I know Warwick here, who's in there. Warwick's in the comment section.
Warwick has come back from
He's the king of gold. I mean, he talks about gold all day. I mean, every single analysis over the last 5 years, I think Warwick said, "What's going on with gold?
What's going on with gold?"
So you must be happy.
To see you back, Warwick. Very, very good to see you back.
It's good to see you. Good to see you back, man. I hope you're doing well. So here's the gold move, and it's pretty much making it a series of slight trend lines. It did find that nice break to the upside, and it needs to find strength here. Now, if the USD gets wild, gold may actually start to fail a little bit. But you notice I've targeted this idea of a bull level. If it's going to find buyers, it pretty much needs to do it here. The flag is in play. The flag has looked very dodgy so far, which is typical of some of these flag moves. So it needs to make a new high. And I think through 2,200, that's going to then make a new 2,300 point, I would say, for gold. So very strong if it can actually get the momentum here. And the bulls need to take control of it pretty much now.
Yeah, it's a little bit now or never for gold, I think, because I think it could find itself at 2150 very, very quickly and very easily, actually. And then if it breaks that level there, then I think we're in probably a little bit of short-term trouble in terms of bull moves on it. So the time is now for gold, but it wouldn't surprise me to see it sort of hover around here and wait for the rest of the market to react. We're boring Woolen.
He hates gold. Don't worry about Woolen. He hates gold. Every week he hates on gold. That's okay.
But he's actually bought. I think he owns a 7-Eleven because he wants $100 a barrel on US oil. So one of his many 7-Elevens that he owns is clearly going to benefit from that move.
Maybe he just wants to buy cheap V8s. UK 100. This was another request of the room from Reese Ty. It's been a very decent trade, actually. A lot of traders trying to short this one. I'm not really sure why they're trying to do that. Trend is up, 2 steps forward, 1 step back, breaks through 7,800. If you've ever looked at the FTSE 100,
that was a big deal. That was a big deal break too.
The Aussie as well, the Oz 200. If you've ever looked at these two, they're very heavy in financials, in commodities, in metals, in materials, those types of companies. So again, it's the inflation play coming back, and if it gets through here, I'm thinking almost all-time highs for the FTSE, and I'm actually kind of feeling it for the Aussie and the FTSE. Look how bad it's been for so long.
It's been so bad. It has.
The inflation play is what this is, but at the moment, big breakout, hit into one of the first TPs. Might pull back a little bit, but now you're going to be seeing that resistance becoming support as well as around the 7,800 zone. So you've got support, demand, support and resistance. You've got supply and demand all sitting around this 7,800 zone. So quite like that.
Yeah.
All right.
That was a very big deal, that break. I really enjoyed that.
Yeah. Yeah, it was a big deal. FSD, Ty, Tesla. Let's go to the stock here. So 1 month. Now, if you buy a Tesla, you get 1 month of the auto driving software. They're trying to, I don't know why they still don't give it to you for free, to be real. But anyway, they're trying to get you encouraged to come and buy a Tesla. That was the big news story of the previous 24 hours, and it pushed Tesla up through this most traded zone. Now, as we know, positional traders have liked this 165. I can also tell you that around 170 is a massive put session. So basically, there's a lot of options sitting at around the 170 strike. And if the market is able, I mean, to me, it was really a shame it couldn't hold above 182, because if you look at it on a daily time frame, let's go over to the daily for a second here. We did hold above the 20 moving average, and we were through that high, which is the last resistance or supply. So if we can somehow get above this wick now, I'd be setting that alert. I think that if we get back above here, could be good times for at least a short-term Tesla dead cat bounce, as they call it. And yeah, it's definitely at a level where somebody at least is trying to buy it up. Somebody's trying. Earnings will be the scary part. Just remember that's over here. It's not too far away.
Yes, no, I do agree. It's if it breaks that, I think if it breaks that out of that zone, and I thought the 190 to 200 was an extraordinarily important level for this, because if it did get up there and break through that, I think it could. It's got very little traffic to get to about 230, to be honest. So I think that it's got a bit of work to do. Like I wouldn't be jumping in. I'm not one of those Tesla rocket people, with their little rocket emojis, thinking it's going to the moon already.
I think that's over there. Tesla's days are done on that one. I think it's just Nvidia now. That's the new rocket, or SMCI.
It started. I know. I saw some rockets in my stream this morning for Tesla. There were some very happy people thinking rocket time, but hey, it's doing the right things, right? Like, we're starting to get a sequence of higher highs and higher lows. It's got to close above that sort of well and truly above 180. I think anywhere between 180, 190 would be a very positive reaction for this one. And then the upside is good. There is definitely good upside for it if it breaks through this congested zone. But right now, all I see is resistance.
Yes, for now. So because the previous daily high didn't quite hold up, we now need to set our alerts slightly higher. Just be warned, though, we do have earnings. It's going to be a big one. It might be a bit of a buy the rumor, sell the fact. People are definitely concerned about the earnings, and that's not that far away. It's been struggling for a little bit. We've got a request here for odd CAD. I think we've covered the main pairs we generally do. Let's just quickly have a look at odd US dollar, another one of these major US currencies here that's right at the sup levels. And you've got structure on the left-hand side. You've been holding as well as you can for now. I only really like odd dollar if it gets through 65.80. And if it gets above that zone, then I think it's long. For now, it's actually weakened. And some people will be giving it a shot here. But it's like every other one of those USD pairs we've looked at tonight, Ty. They're all, if they get through the 64.80 here for the Aussie, I'd say new lows are coming all the way down to maybe 63.50 relatively fast too. So it'd be like this. I think there's a big momentum move coming on these dollar pairs.
I get the feeling that people are going to be rewarded for their patience, because I think some serious moves are coming.
Yeah, some huge crack levels. And luckily we'll be doing this next Wednesday. And the Wednesday after, so we can have the Wednesday after that progresses. Well, that's true as well. But I think it's more like the non-farm, the pre-non-farm, and then after non-farm will be really cool. Now, we've got a request here for odd CAD Ty. So it's that time of day again. If you want to put in your requests for a few charts for us to have a look at, we'll do it right now. Chuck it in the comments. Also, if you enjoyed today's content, make sure to give it a big thumbs up. It does help us out. And we really appreciate it, as always, because we love doing this type of stuff. We love bringing you extra data, and we hope it helps you to understand the markets better. OzCAD, you can see the previous analysis I've done here. I guess it worked pretty damn well. So that's nice. That was whatever we were doing. This actually looked like a flag, I guess. We took the poll, and the poll went into the supply, and then it sold off. So it was nice TA. In this case, we have a daily that's sitting right around here. On first glance, I'd say it just looks like kind of it's coiling. Smaller time frames, it still looks like it's coiling a little bit. Do you have any insights on this one, Ty, that you like in particular, just on face notice?
Yeah, I do like. I like what I saw on the daily, because really that was technical analysis playing out on top of it on technical analysis. Like, what I see there is an inverse head and shoulders where the right shoulder was a flag that played out perfectly, and then up it went, and now it's retesting the neckline of the break of that inverse head and shoulders. So realistically, I think it's an extraordinarily important zone for it. It's pattern on top of pattern. And I think now is go time for it, though. If it is going to go long, I think it needs to be trading above that 20 moving average sooner rather than later. And if it does that, I'd be the targeted zone of that 89.50 would probably be the first place I'd be aiming for, and then that 90 sort of 50 area as the next, right
not
up
bad
there.
proof, though. Not bad proof. We like a good TA.
Absolutely.
We've got proof. So
absolutely, no, really, really nice trading there.
Yeah, good little level. If it probably levels that you want to see broken 89 first, at least get above the previous daily high. Put a closure in. You can see even over here, it was unable to hold the rally. So what this market's telling you from the wick position so far is it seems to not be able to hold anything above 89. That's 1, 2, 3, and 4 times it's failed. If we do manage to hold above this level, I think that's where the strength comes into this pair. So high timeframes help you on small timeframes. 89, certainly a level I would be looking at. Thank you very much. Some other questions coming in here. Royston says, Swiss JPY looks to be moving. What is your view? There's some CHF weakness, probably because of the rate cut. So let's have a JPY. Pepperstone platform. There we go. Best platform for CFDs. Make sure to check it all out, guys. And you can see here the CHF JPY now. So we've dropped a little into this range, and it's certainly looking a little bit weaker. Let's go. Oh, look at that weekly close. That's kind of like the oil trade from before. Yeah. We have that oil rejection, then it makes the new lower low. And this is the type of thing that happens. So if this then closes below this level, where are we looking at next? Potentially further really significant weakness to 163.50. It also tested the supply. Doesn't look great on initial. No. If you're looking at longs here, it certainly looks more weak than long. Ty, your thoughts initially?
Yeah, and it's hard to make a case to. It's got a lot of work to do to get me going along on this one. I can tell you that. It looks short all day. And I think 63, 64 or 163, 164 is actually a real potential for that one.
What I'd like to see is maybe some consolidation here, then bust through, then instantly comes back up to that supply consolidation. This would be a sweet short.
That would be a great short.
Would be a great scenario.
A retest of the break.
JPY. Yeah. Now, that's another one as well where we've got JPY potentially looking at the strong side because obviously the USD was also weakening against the JPY, and the CHF would just weaken more because it's technically the weaker currency. Not bad. And maybe it's going to come through. Matthew says here, would you mind having a look at Glencore PLC? They are potentially looking at listing on the ASX and looking for copper companies to feed into their smelter. Sure, we can have a look at that. So this is a single stock. It's probably, I assume you want, what's Glencore's code? 1 second. I'll do this. Ty, any other things you wanted to mention? I think it's G.
No. I think that only that the markets, although they look like they're a little bit boring at the moment, I think they're presenting scalping opportunities. I think that's what we've been really talking about all week inside the rooms. That the ranges of the support and resistance have been very, very strong, and I think that theme is probably set to continue until we get a serious daily break outside these levels. So. Yeah, probably for the rest of the week, I would be continuing that sort of theme where I'd be keeping the trades relatively short and sharp and just aiming for those support and resistance levels that have been proven over and over again to be holding up over the last week or two. I think that probably mentality is probably the best course of action right now. I wouldn't be looking at setting long-term positions, but I think that those bigger swing positions are not far away. I really think that. I think the market's about to really give us some action. So don't get caught up in that action unless you're prepared for it. So keep them short.
I'm not sure I have the Glencore code. I guess it's glen.al or something like that should come up with it. But I'm not sure if I'm going to be able to do the analysis. So I apologize for that. Let's just finish here with crypto. Yeah. Bitcoin, very good trading, Ty. I got to say, this is the strongest I've seen it for a while in terms of really good technical analysis. I absolutely love that 63K move to the long side. This was pretty much a classic A classic big support hold at 62. We talked about the 3 scenarios last week, which was 62 and 51, I think it was, and a half, and 40 something. But this level here was very, very nice. Then it managed to break through to the 66, which already showed strength, and now it's above 70. So, I mean, the next move could be a new all-time high. I mean, at the moment, it's making a series of strength. If you are a really small time frame shorter, this would have been an acceptable short to go with, but you'd want to be breaking even that pretty fast, because to go against Bitcoin, it can be very, very aggressive to the upside. New low here might bring in some weakness, but again, 66 would therefore be the next strength line. Love that level, though. You can see I put bulls need to hold. It was one that I had way earlier than the market actually getting down there. So, yeah, this was pretty good technical replication.
It was. No, that was really good.
Yeah.
Let's have a look. Woolengabba
It says Glenn,
says,
yeah, but I can't. I don't think I can pull it up. One second.
Woolengabba says that trading the range, smart thinking, Ty. Well, thank you, Woolengabba. I'm going to come and buy a nice coffee from one of your 7-Elevens for that. Happy to support.
Woolengabba also says 100,000 after halving easy. I guess let's see what everybody thinks Bitcoin's worth after the halving. So let's go with the 12-month target. Let's see what everyone thinks in the chat, and we'll get to the end of the show. Now, I'm sure there's going to be some people saying 0, some people saying 50. It's a polarizing subject. Some people saying 150. To me, it's all about market capitalization. So I think at the moment, Bitcoin's around 1.5 or 2 trillion or something like that. I think it's got very, very real circumstantial evidence to be able to get into the 3 to even 4 trillion over the next coming years. So we'll see whether it can get there. And obviously, for now, just follow the price action. That's going to be the most important thing.
All
right, guys. Thank you so much. We hope you enjoyed today's session. We'd love to see you here next week. Remember, links in the description down below to follow along. Give it a big thumbs up if you enjoy it. Place some comments down below, Pepperstone, and we do also read them as well about feedback and what you've enjoyed and what you haven't. And yeah, we'll sign off from here. My name's Tom. Goodbye for now. And Ty, any words
Thanks,
of wisdom?
everyone. Have an amazing Easter, and yeah, we look forward to seeing you next week.
Yeah, have a great long weekend for anyone that is able to get one. All right, see you for now. Bye-bye.
Thanks, everyone.